Welcome everybody to the BitBoy Crypto Morning Show. We're going to today be taking a look at, are we in a bear market? And there are some numbers that say, yes, we definitely are. So we'll be taking a look at that along with to yesterday's massive drop. So let's go ahead and get started here. Get off of that page. There we go. A refresh. All right. Here we go, guys. Market cap, wow, 3.529 trillion. That's up 1.1% from yesterday, apparently. It does not feel good to be closer to 3 million or 3 trillion than 4 trillion, which we were yesterday. 24-hour volume, 287 billion. Bitcoin dominates 58.5% and ETH dominates 11.6%. And you can see in the 24-hour trading volume. ZK Sync and Firo trending along with Zcash. Giggle Fund, top gainer of the day. Haha. One coin can change your life, I guess what the name of that is, maybe. ZK Sync over here as well. And this cat just keeps scratching the wall. Okay, right now the price of Bitcoin is coming in at $103,487. It's actually up from where it was this time yesterday. We have now gone below. We've gone below the massive crash day, which was back here. And now this one seems like, well, I don't want to call it a flash crash because it wasn't a flash crash. It took a few hours to get here. But yesterday we went down, we went here. And this is where the flash crash was. So we've actually gone below those. You know, I had a feeling when that happened that, you know, maybe we were going to see us hit those lows again, which I was surprised at on one hand, but on the other hand, I wasn't. So Bitcoin just seems so good and so healthy. And then lately it's been blah, 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 blah. So are we in a bear market? I mean, that's what people want to know. We're going to talk about that in a few minutes. Ethereum at 33.89, XRP at 226, BNB 958, Solana at 159, Tron 28.71, Dogecoin 16 cents, almost 17 cents, and Cardano coming in at 54 cents. Let's see from yesterday. Zcash, Aster, Quant, Pump Fund, they rebounded pretty well. Biggest losers today. Dash down 13%, back to number 81. I just can't believe Dash is still around. I really am shocked to find this out. Let's go to their website. Project I thought would do really well in the last bull market, and it didn't. 2 bull markets ago. Synergy and Earn with Dash Wallet. They have Trust Palette, Trust Pal, or what's it called? Dash Pay. Wow. Instant payments 81st. Is it still a privacy coin? I don't think it's a privacy coin anymore. Which is, maybe people don't know that. Maybe it still has that private send option, but I think they went away from that back when privacy coins were getting crushed. So see, this is 2017. Absolutely massive run up for Dash, and then did not hit all-time highs last time. And very far away from them again as of right now. Okay. All right. Anything different for the daily? Dash up for 7 days. ICP up big time. ICP, good job. Number 50 right now, 52. I tell you, these, see what's in the top. Look at, let's go look at the top 200. Can we do that? Yeah. I think there's so many good coins in this 100 range now. Jupiter is in the 200 or 100s. Psi is 106. Render is 107. Bonk 110. Filecoin 112. XDC 114 sounds about right. Mutable X. Pancake Swap 126. Celestia, that's about where it was, maybe. No, Celestia was in the top 100. Lido definitely was. Let's see here. Anything surprising in here left? The graph. I mean, I can't believe it's in 142. It's crazy. Floki. Fifth Network at 158. Conflux. Thought that was going to be a top 20 coin. Pendle 175. Sandbox 178. What's going on with Sandbox? Are they ever going to do anything? Open their game? Or maybe it's already open. I don't know. That's a marketing fail if that's the case. Jasmine down at 180. Whiff down to 187. Wow. Gala. Yeah, I mean, there's a lot of good projects in this 200 range, 1 to 200 range. Very interesting. Did I miss that one too? No. Thought I saw something I didn't see. All right. So here we are. Here's Bitcoin. It's a daily chart. Let's go to the 4-hour chart. Just a massive fall. We're just at 115. This is the 4-hour chart, so it's not that many days ago. We were up here. Now we're all the way trying to climb back up. I mean, it does look like it is trying to climb back up after what happened. We're going to look at the news here in a second, or right now, actually. Okay. Bitcoin falls below 100K for the first time since late June. Yeah. Comment Dash, that's a name I hadn't heard in a long time, for sure. Bitcoin on Tuesday plunged below $100,000 for the first time in more than 4 months. Its crypto holders backed off the risk on asset amid growing concerns about the sustainability of stock valuations driven to stratospheric heights by the artificial intelligence trade. Bitcoin was last trading 5% lower the day at $100,893, dipping at one point to as low as $99,966. I think it actually did go lower than that. Let's see what it went to. $98,818. It looks like. So these numbers are not right. The leading cryptocurrencies attract many of the same investors as artificial intelligence stocks, linking the two trades when one goes bad. NASDAQ, combined home of the leading AI stocks, dropped more than 1% Tuesday. Investors selling AI-linked Palantir on concerns about its eye-watering valuation, despite the data manager solid earnings results in its latest quarter. Bitcoin and the broader crypto market is exhausted. Even with stablecoin growth, rising real-world asset volumes, and Bitcoin increasingly behaving like an institutional store of value, the market doesn't care. Bad news is very bad for crypto right now, and good news barely moves the needle. This guy says individual investors may not be buying the dip as much as in the past. While selling for long-term holders is a common feature in bull markets, retail spot buyers have been less engaged than prior cycles. The latest downdraft could pull Bitcoin deeper into the red, dragging the token more enduringly below the $100,000 support level. Bitcoin's price has largely trended downwards over the past few weeks, with October historically strong seasonality failing to materialize this year. I would really like to push back on that and say, yes, we did get a red October for sure, but let's remember we hit a new all-time high in October in the beginning of the month. So it kind of came and went, and the numbers bear that out. Why Bitcoin has dropped into a bear market weeks after hitting all-time highs. So are we in a bear market? Bitcoin entered a technical bear market on Tuesday. So technically, it is a bear market. More than 20% from its most recent record high is the qualifier there. But I would say, if you go back and look at the history of Bitcoin, bull runs, what you'll find is there are plenty of 20% corrections, and we didn't call those bear markets. Historic liquidation and macro jitters are among the two factors weighing in on the world's top crypto. Bitcoin dipped into a bear market on Tuesday, just a few weeks after touching fresh all-time high. Token traded below $100,000 for the first time since June, good for a decline of 21% from its most recent record high, $126,200 on October 6th. It was a month of dashed hopes for the world's largest crypto, as dreams of October faded, with Bitcoin suffering its first losing October in 7 years. Tuesday's sell-off of over 5% coincided with broader weakness in risk assets. Trying to only read stuff that we didn't just read. The sentiment index has fallen to 21, the lowest level since April 9th, indicating extreme fear. Last month, entering this territory, the market already those levels. Weeks of selling have whittled Bitcoin's year-to-date gain to about 8%. The latest stretch of volatility has weighed on the market, stemming from trade jitters, a monumental liquidation event, waning bullishness for crypto treasury strategies, and a recalibration of rate cut expectations from the last Fed meeting. It looks like an exhaustion across the board. On October 10th, a fresh round of trade jitters sparked a historic unwinding of Bitcoin long positions in a short span of time. Bitcoin investors liquidated $19 billion across exchanges in under 24 hours, some estimates suggesting the amount was closer to $30 billion. It was the largest Bitcoin liquidation ever. It's almost irrelevant what news caused this. Just to remind us of how fragile our markets still can be. The event was so extreme, the market pros say investor sentiment is yet to recover weeks later. Some worry that high volatility could mean more liquidations ahead. A 10% move in either direction could trigger massive liquidations. Cascading liquidation and offshore derivatives trading early in October set the tone. Overall, the market seems far less certain that some of the most bullish year-end forecasts will be achieved. Crypto bulls like Tom Lee and HSBC's Jeff Kendrick have Bitcoin price targets around $200,000, meaning the crypto would need to embark on a rally of 100% in less than 2 months. With trade headwinds on the horizon, less certainty about future rates, and uncertainty as to how the government shutdown will impact this month's economic numbers, buyers don't have enough data to underwrite market entry points at 120K anymore. So there you go. Nobody wants to buy it at 120K anyways. 3 things that must happen for Bitcoin to avoid the bear market. Bitcoin tumbled more than 8% last week, or this week, excuse me, slipping below the $100,000 mark. Sell-off intensified amid sharp declines in AI-related stocks, which fueled a broader risk-off shift across markets. Kobesi letter said that Bitcoin has officially entered a bear market territory. Now, we've definitely entered bear market possible territory, but I certainly wouldn't say we're in a bear market just yet. because I don't think we're going to see normal bear markets. I think what we saw over the last 2 years is probably a little closer to reality, where before the halving it can pump, and after the halving it can pump. It can also dump before the halving and dump, whenever. Bitcoin leveled its weekly moving average. Bitcoin continues to trade above its 200-week exponential moving average, currently near $100,950. A key long-term support that has defined every major. Each time BTC has tested the level following strong rallies, it has rebounded sharply to set new highs, confirming the EMA as a market structural floor as shown below. You can see it. As long as Bitcoin maintains support above its 200-week EMA and RSI base, the broader bullish structure remains intact. A breakdown below both, however, would increase the risk of a deeper bear market retracement. And it just goes on to talk about Arthur Hayes and what he says about that it's really just it's all a big money trick. Is all he basically says here. It's a big money trick. The government says they're not quantitative easing, but they actually are through different avenues. So there you go. Bitcoin retail investor at max desperation, says Bitwise CIO, but crypto winter not coming. Bitcoin's fall below $100,000 is its lowest level since June. It sparked fears that the worst is yet to come. Another so-called crypto winter, prolonged bear market in cryptocurrencies that the market wrestles with every time digital currencies sell off hard in a short period of time. But Bitwise Chief Investment Officer Matt Hogan says that while the retail investor is in max desperation mode, he sees that as a reason to bet that a bottoming in crypto prices may materialize sooner rather than later. Wall Street and financial advisor support for Bitcoin and growth in crypto ETFs, he is even willing to go out on a limb and say that amid the heavy selling, a new record high for Bitcoin before the end of the year is not possible. He said it's almost a tale of two markets. Crypto retail is in max desperation. We've seen leverage blowouts. The market for sort of crypto native retail is just more depressed than I've ever seen it. But Hogan believes that crypto trading will continue to shift into an institutionally driven market. And interestingly, that market is still bullish, he says. When I go out and speak to institutions or financial advisors, they're still excited to allocate to an asset class that if you pan back and look over the course of a year, is still delivering very strong returns. So my view of the market is we've got to get through this retail flush out. We have to hit the bottom from a sentiment perspective. I think we're very close to that, he added. I don't know what it would take for retail to really, really be out. Maybe going back under 100K. The boom in ETFs, including iShares and Fidelity Wise Origin Bitcoin Fund and Grayscale's Bitcoin Trust, is changing the investor composition. And while week-to-week inflows are into this year, week flows into these ETFs has slowed down since the second quarter of the year, we continue to see strong inflows into Bitcoin. He expects more support to materialize for crypto into the end of the year among financial advisors who will look past the current dip and see an opportunity to show their clients that they understand where the market is going. Bitwise's own Solana staking ETF, BSOL, brought in over $400 million in flows in its first week. Running out of tickers, right? They got to be running out of tickers for these things. Last week, CEO Michael Saylor of Strategy told CNBC he thinks Bitcoin could reach $150,000 by the end of the year. One among recent bullish calls on crypto, for now at least, looked ill-timed. But Hogan doesn't think it's an outlandish call even as Bitcoin hovers near a 6-month low. I think Bitcoin could easily end the year at new all-time highs, he said. So that means getting north of about $125,000 to $130,000. Whether we'll get all the way to $150,000, we'll have to see. I do think the sellers are nearing exhaustion and the buyers are still relatively hungry. When those two things sort of cross paths again, I think we could end the year close to or at new all-time highs. If we're lucky, we'll get to Saylor's target as well. Institutional investors whom Hogan described as more maybe even keeled about what's going on at a fundamental level in crypto will start to drive the market forward. But we do have to finish this washout of retail sentiment. I think we're closer to the end of that than the beginning, but there always could be a little bit more downside. So there you go. We're getting two polarized messages. One that is definitely a bear market, another that is not a bear market at all. Stock and crypto tumble after CEOs raise concerns of a market pullback. The global stock rally hit a wall Tuesday, dragged lower by artificial intelligence and tech companies. Nvidia dropped 4% with a market value of more than $4.85 trillion. Nvidia lost $200 billion from its market share. Crypto also faced steep losses, dropping below 100,000 for the first time since June. International markets face a similar path. Earnings from defense darling Palantir helped trigger jitters among traders. Solomon said, there are things that will change sentiment and create drawdowns or change the perspective on the growth trajectory. And none of us are smart enough to see them until they actually occur. AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, 90% of capital spending growth since ChatGPT launched in November 2022. Wow. The Magnificent Seven comprise over 30% of the S&P 500, a level of concentration exceeding that of the dot-com bubble. Those are Apple, Amazon, Alphabet, Microsoft, NVIDIA, Meta Platforms, and Tesla. It remains unclear whether such expenditures will be met with corresponding revenues. Meanwhile, the dollar index, we haven't looked at that in a while. It's slightly higher, rising to its best level in about 3 months. Here's a Canadian story for you. The Canadian budget promises to introduce framework for Canadian dollar-backed cryptocurrencies. So they're trying to get stable coins going. The Liberal government, I guess that's their party. I don't know. The Liberal government is committing to roll out new legislation to ensure digital currencies are secure and stable enough for consumers and businesses to use. The initiative announced in the 2025 budget is now part of the government's payments modernization plan that will deliver more secure, innovative payments for Canadians. Legislation also requires issuers to meet national security standards to protect Canadians. Got to protect Canadians. We've been doing it since they've been around. Stablecoins have been around since 2014 when Tether launched the first USDT. Other companies have launched stablecoins since then, some of which have come crashing down. The U.S. government passed its own regulatory legislation in the summer. The Genius Act opened the door for major American companies like Walmart to issue stablecoins backed by the U.S. dollar. Wow. Those concerned that Canada's fallen behind on cryptocurrencies have been urgently pushing the federal government to regulate stablecoins so companies will have a framework to use to issue their own loonie-backed crypto. I don't know what a loonie. What is a loonie? It's not a Canadian dollar. Let's see what it is here. It's the colloquial name. Okay, so that's what they call the $1 coin. Loonies. Okay, I didn't know that. And while the Bank of Canada dropped its central bank digital currency project last year, Calgary-based finance company Tetra Digital has raised $10 million to create a national digital version of to create a digital version of the Canadian dollar with backing from Shopify, Wealthsimple, and National Bank. So, anyways, Canada is trying to get with it. I'm going to skip this one. Gemini Exchange is now preparing for a prediction market contract launch. If approved by the U.S. derivatives regulator, Gemini would compete with dominant players, including Kalshi and Polymarket. So Gemini has this they're pushing. May take months or years. So European authorities dismantled $600 million fraud in a global sweep. 9 people have been arrested in connection with a coordinated law enforcement operation that targeted a cryptocurrency money laundering network, defrauded victims of 600 million euros, $688 million. According to a statement released by Eurojust today, the action took place between October 27th and 29th across Cyprus, Spain, and Germany, with suspects arrested on charges of involvement in money laundering for fraudulent activities. In addition to the arrest of the individuals from their homes, authorities conducted searches that led to a seizure of $918,000 in bank accounts, $476,000 in cryptocurrencies, and $344,000 in cash. So there you go. All right, guys. Well, that's all the show I've got for you guys today. Hope you guys enjoyed it. And we will see you guys tomorrow. Good boy out.